Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we are looking at crypto regulation regarding Russia this time round. Fitch saying proposed Russia crypto ban eases risks but curbs innovation. So let's go through everything that's happening here. Russia's retail cryptocurrency operations currently stand at around $5 billion per year. Before we go into anything, of course, this channel is not to be considered financial advice, always do your own research, and of course, subscribe to the channel for everything happening in the Web3 space. With that said, let's go into it. On Friday, credit rating agency Fitch published a research piece about Russia's proposed ban on crypto, which we are going to have a look at in this video. Although the report agreed with the Central Bank of Russia's position that the ban would limit its financial system's exposure to risks, it also cautioned that such a proposal could hold back the diffusion of technologies that could improve productivity. In addition, Fitch warned, suppose this slows the spread of crypto-driven innovations that, for example, improve the speed and security of payment or asset liquidity via tokenization. In that case, it would over time weaken this aspect of the Russian banking sector's operational environment relative to peers. Additionally, Fitch commented on the adoption of a central bank digital currency or CBDC in Russia, saying that the digital ruble should increase the authorities' capacity to monitor and manage financial flows, which might otherwise be eroded by the growth of crypto transactions. The report also clarified that a primary motive for the CBR proposing hash cryptocurrency restrictions might be to reduce competition against its upcoming CBDC. Like India, Russia's crypto regulatory environment has been chaotic lately, with policymakers frequently oscillating between an outright ban on digital currencies versus calling for an established regulatory framework. At the same time, even former Russian President Dmitry Medvedev, sorry for getting the name wrong, offered his comments on the crypto ban proposed as reported by local news outlet rbc.ru on Friday and then translated by Cointelegraph. I'll say it frankly, when we try to ban something, it very often leads to the opposite result of what is intended. But the position of the central bank has, of course, its own reasons, which are also known to everyone. Having said that, I think it's time that we have a look into Fitch Wire to see what they're actually saying about this, and then we can make a hopefully educated thought process, I guess, from there. Fitch Ratings: the Central Bank of Russia's proposed new restrictions on the use of crypto within Russia will limit the financial system's exposure to risk associated with the emerging sector, although they may hold back the diffusion of technologies that could improve productivity, says Fitch Ratings. The measures propose blocking the trade of crypto for fiat in Russia, as well as banning the use of Russia's financial infrastructure for crypto operations. Organizing the issuance, including mining, circulation, or exchange of crypto, would be prohibited, and banks would be banned from investing in crypto. Some entities, including the Ministry of Finance, have presented alternative solutions and suggestions, I guess, and the proposals may be revised. If the CBR's approach is adopted, it should increase the authorities' capacity to monitor and manage financial flows, which might otherwise be eroded by the growth of crypto transactions. We believe another motive for the restrictions may be to favor the development of Russia's proposed CBDC, as in China. If the CBR plans to trial a CBDC possibly as soon as this year, which could provide holders opportunity to do transactions without banks' participation. We believe the introduction of the CBDC may result in some deposit outflows from the banking system, modestly increasingly competition for funding and raising interest rates. The CBR proposes that during the introduction, it will provide commercial banks with access to its refinancing operations in the required amount to substitute deposit outflows and maintain financial stability. The digital ruble could also provide banks with offsetting new fee-generating opportunities. However, the net credit impact on banks will depend on the structure and evolution of the CBDC project. The CBR estimates the value of Russian retail cryptocurrency operations at around $5 billion annually. Russian banks' risk exposure to the sector is currently low, but financial consumers' interest has prompted efforts to increase engagement. BBB Stable, for example, has tried to register a digital assets issuance platform and to launch a blockchain platform for its Bitcoin stablecoin. Initiatives involving privately issued payment tokens are unlikely to advance in light of proposed regulatory changes. In our view, of course, in Fitch's view, deeper involvement with the crypto sector would have come with a range of risks for the bank. The volatility of crypto, highlighted by steep falls in the market value of Bitcoin and other digital currencies in recent works, can contribute to earnings instability, balance sheet complications, and potential asset liability mismatches. Crypto involvement can also create reputational and legal risks around illicit activities, cybersecurity, and operational risks to manage, as well as ESG concerns and additional compliance costs. might sound really stupid here, but is ESG a thing in Russia? Maybe it is. Banning cryptocurrency operation bypasses these issues. However, it also blocks off potential revenue generating activity and could set back Russian banks' engagement with the technologies underlying the crypto sector if this slows the spread of crypto-driven innovations that, for example, improve the speed and security of payments or asset liquidity via tokenization. It could over time weaken this aspect of the Russian banking sector operational environment relative to peers. We believe risks to innovation will be lower at larger Russian banks with international operations. If overseas crypto operations are not banned, these banks will have the option to invest in international infrastructure or acquire companies providing crypto services. TCS Group, the holding company of Tinkoff, for example, has recently announced the acquisition of a Swiss-based company providing crypto-centric financial services, although its focus is likely to be non-Russian customers and servicing international markets. If these banks are able to deploy the underlying technologies effectively within the Russian market, within the scope of any legislation, they may gain competitive advantages in the long term. My question, of course, to you is, where do you see Russia going when it comes to both CBDCs and also when it comes to general cryptocurrency regulation? And of course, this also goes towards just general decentralized technologies. What are we looking at with NFTs? Would love to hear your take. That being said, this is the Web3 channel covering everything happening in the Web3 space, from crypto, NFT, and metaverse news. Subscribe for everything happening in this scene. Not financial advice, of course. Always do your own research. Have a great day, and I'll see you in the next Web3 video.